What's up, guys? I'm Joe Von Grigson. Welcome to Pippin and Dippin Academy's YouTube channel. I am so excited today. I got Hunter, the Pip Hunter Burkett, here with me. Hunter, you want to say hello?
What's going on, guys? What is going on?
We got some good sauce coming by way of Texas today, boys and girls. Hunter's put together some really good stuff today. We're really excited. But before we do that, if you haven't done it already, subscribe to the channel, pound that button in the bottom corner there. You can subscribe, make sure you get notified anytime we have a new video. And if you like the video that you're watching, please hit the like button so we can help other people just like you on YouTube. And of course, as always, leave a comment. If you have any questions, leave them there. If you'd like us to shoot a future video or there's something that you have a question about, put it in there and we will get back to you. With that, guys, today's video is so good. Hunter's put this together for you, and I'm gonna turn it over to the man and let him show you the way. So Hunter, it's all yours, brother.
Yeah, so guys, we want to talk about, and I'm sure I think we've shot on this, and maybe it was a different type of caption or title on the video, but I love myself, and I tell my students all the time, when I'm getting into a session on Monday or Fridays, because we have calls on Mondays and Fridays, and where people can ask their questions and stuff like that. But I really get into it if somebody says that they're struggling with, understand the set, understand that. And I'm just like, I get frustrated a little bit, you know what I mean? Especially if somebody's been doing it for 6 months plus. The reason why, guys, is because it's just like anything else. It's just like learning how to speak, learning how to spell, learning how to do math. You never did learn all that in a timely manner without doing any homework. You know what I'm saying? Like this business requires homework. Any business requires homework. You know what I mean? So I talk about flashcards all the time. I talk about, if you're inside of a trading week and especially if you've identified a trade that was just a complete awesome winner, banger trade is what I call them, and they do everything that you want them to do. You need to go inside of that trade and look exactly how it done it, and mark it up, right? And then screenshot it, put it into a folder where it says my perfect setups, right? That's what this business is about, is leaving your emotions in the toilet and coming to the markets emotionless and focusing on 1 to 2 trade setups. If they're not present, don't take it. You know what I'm saying? That's called discipline, right? So what I'm going to do is I'm going to share my screen and I'm going to break down a trade setup, right, on what I would do, okay, of me viewing the market. I'm going to break down from let's just say if it was the beginning of the week, all the way from the daily, all the way down to finding a trade setup, marking it up, and then screenshotting it, right? And this is what I do. That's what I do almost every weekend. I do it with my students on Friday, and then I'll do it again throughout the week, and I'll put them into my arsenal, right? So, and it's good to have that because you can just bring them up and reference them, pull them out when the market's moving in a way you're like, oh, I don't remember that, blah blah blah. Did it take liquidity, blah blah blah, and stuff like that, and then you can reference it, right? So I'm gonna share my screen and I'm gonna bring up an indice, SPX 500, because I want to switch it up a little bit. I've been doing a lot of Forex pairs, but this pair has been paying Hunter really, really well. And I love it. You know what I mean? If you guys are trading high volatile pairs, this is kind of like a mixture between gold and NAS, right? It gives you that volatility, fast movement type of experience, and then it ain't the big dog. It's not US 30. You know what I'm saying? And it doesn't really matter, guys. It doesn't matter how volatile US 30 is, NAS, SPX, whatever. It's all about the set. If you can get the set right, then you can get this all right, right? So what I'm going to do is we're on the daily time frame, as you can see, and I marked up these liquidity zones, okay? This is not support and resistance to me. Okay. As you can see, I was busting through price. The reason why I have a zone marked here is because at the point in time when this market fell, it stopped here. And what did it take on the left of you? It took this and it took this liquidity. Okay. There's money resting at these areas. And then it pulled back really, really quickly, right? Pulled away from it. Okay. Fills all of these, some of these fair value gap, these imbalances here, and then drops, right? And also leaves an area of value, which I call liquidity. And you can see how market comes back down, okay? And then it takes out this liquidity, comes back up, creates a double bottom. And guys, liquidity is left here, okay? And we move away. When we start to move away and we start to have a good bullish market, this is when I start to say, okay, what's ahead of me? What's ahead of me? We got liquidity here that left, somewhat here. Pretty sure that, you can see that price reacted here. And then this double top, right? And you can see how it took it out and brought it back in. So I'm not really focused on, I don't care. I want to know how much room I have from here to there if I'm here, because I know this is going to be taken out and I know that's what we're after, okay, if we're in a bullish market. So I want to know how much room I have from here to here, or actually from wherever we really reversed that. So we got a lot of movement to take out liquidity, okay? So inside of here, inside of all these daily candles, okay, are trade sets. And inside of those candles, I'm doing my due diligence to figure out the best trade setup for me, which I'm about to show you, my trade setup, my perfect trade setup, and I'm going to take a trade, right? So I want you to understand the market's type of movement, okay? How this algorithm is built. As you can see that the daily candle comes up, closes, okay? I'm going to put a line at that daily close. I'm going to put a line at this daily close. I'm going to put a line at this daily close. And you're like, well, why does it happen every day? It doesn't happen every day, guys. It doesn't happen every day. This is the reason why I say if your set's not present, don't take it, right? So I put a line at these daily candles every day. This one closed bearish, so I'm not going to mark it. Bullish, okay? Now I want you to pay attention to these candles. I can even mark this one here. Now you have to do your due diligence when you're following your direction, okay? You got to know your market sentiment first, which is in this case we're up, okay? So look how when price closed, price pulls back, stop hunt, rise. Price closes, stop hunt, rise. Price closes, stop hunt, rise. Price closes, stop hunt. This is a big movement. Even though it's a doji, your setup was still in here. Okay? You know your market direction, this doji won't scare you. Right? Boom. Market closes, stop hunt, back into it, rise. Okay? We closed a bearish day that day. So we would have had to wait for the next day to get our trade set up because this was just a bearish day. Okay. So we closed down here. I would have waited. Probably we could have got into a trade here somewhat or waited for this day to close. And then look how it closed. Okay. Stop hunt, rise. Close, stop hunt, rise. Close, stop hunt, rise. That's my trade setup, guys. I follow the direction. I'm going with the trend. I'm not deviating. I'm not countering, nothing like that. There's plenty of trades inside this trend where I don't have to counter, right? The reason why I say that, guys, is because if you're countering, what's the number one thing that you're going to tell yourself when you lose that trade? Dang it. I wasn't going with the trend. I countered, right? If you lose if you lose a trade or even get into drawdown when you're going with the market sentiment, your chances of surviving that drawdown and surviving that being a loss are way higher than a counter, right? So think about that. So what I'm going to do is I'm going to get rid of these lines real quick. And guys, this market is all about discipline and keep your emotions out of it. That's it. I'm telling you. Keep your emotions away from this thing and let these trades materialize. Let your setup. Don't get me wrong. You need to have experience. You need to have experience in this market. You need to trade. You know what I'm saying? So, and that's the thing, guys. What did Bruce Lee say? He said, if and that's the whole analogy here. If I'm telling you to focus on one, let's just say one trade setup, because I'm about to show you just one. If you focus on one trade setup, he said that he was more scared of a guy that practiced the one kick versus somebody that practiced 100 kicks, right? So that right there alone, and the dude was Bruce Lee was very well rounded, very, very, very awake type of person when it comes to personal development in his mind. You know what I'm saying? So we'll break down to the hour. We can go to the 4-hour breakdown and let you look at. But the 4-hour doesn't. I love looking at the 4-hour because I can look at short-term type of areas where I can know where to maybe take my profit, or tell me that it could react to this area, because you're looking inside of a daily candle, right? On the daily. So it could react to this area and stop you out with just that one 4-hour candle, and you got stopped out for no reason, right? So we busted off here. I want to show you some trades. So I'm gonna go to the hour, and we'll break down this way, okay? And guys, I'll let you know I only trade New York session. I'm gonna say that again. I only trade New York session, right? The reason why I trade only New York session is, for one, less room for error. That's one. Number two, I get to see what Asian in London has done. Okay. And plus, I also want to, you know, I want to live my life. I don't want to have to wake up at 2 o'clock, which would be 1 o'clock my time, 1 o'clock in the morning, to go to the market, disrupt my great sleep, because I get up at 5 in the morning to go to the gym. I don't want to disrupt my sleep just because I want to catch some moves, right? When I know that I can do it in New York, right? So look at the boxes that I have drawn up, okay? This is the same concept if I showed you. This whole movement here on this hour time frame is a daily candle, correct? From black line to black line. Okay, I want you to pay attention that this daily candle closed here. And I want you to pay attention to the way Asia moved and consolidate. This is their hand inside of the day that they start. Okay, they start, they accumulate, they stop hunt, they pull back into that daily candle that I told you about. Okay, they set the pattern, and then boom. Okay, so I want you to look at both of these. We can look at this one, but two's enough, or even one's enough. So the 17th of March, and the reason I got these boxed up, guys, is because I took these trades. Okay, I boxed this one up. I didn't take this one because it's not in my trading time. But it was an awesome trade, 1 hour shark fin. And I want you to pay attention to that too as well. The reason why I got them boxed up is what? I love to see that. That's a part of my trade setup. I love to see a 1 hour shark fin, okay, on the TDI when this is present. This TDI, any indicators are junk. And I'll tell you that, right? Indicators are junk, but this right here is a piece of confluence that I use solely to help me understand that this market has stop hunt. That tells me that this is a stop hunt, right? Because it usually a stop hunt, when you look at a stop hunt, it's usually a sharp shark fin on the TDI. And that just kind of gives me a more of a confidence boost that that's present, right? So inside that box, we'll bust down to the 15-minute. We'll go this way. Okay. I want you to pay attention to this set. Okay. We have a little bit, it did come down equal, just didn't come down to the wick. So, but I want you to pay attention to this. This is the same concept. Okay. Delete. I want you to pay attention to this low. Okay. I want you to pay attention to accumulation, stop hunt, pulls back into it. This one candle does two things. Okay. It induces traders to sell, Okay. And then automatically, people that are right about the trade, they instantly buy and they trap them. They do it one more time, make a second leg. They give you the entry. My entry is here. Okay. I don't have to write this out. You guys, as I go, I'll write it out. I'll write it out. As I go, let me hang on a second. Okay. So what I'm going to do is write this out. So right here, this close above the 13 EMA would be my entry. Okay. The close above the 13 EMA would be my entry. Okay. And then it took back off, and then it took off. Okay. We have what? Let me go back to we know our market sentiment, right? So all I have to do is come here and put 1. My peak formation low is set. Okay. I know that. I know my market sentiment. Liquidity's already been taken to the downside and everything. Okay. Everything. So this is a broader perspective. Okay. This is what I want to write on number 1 because that's what I looked at first, correct? We know liquidity's been taken. Peak formation low is set. We have a 1-hour shark fin. Okay. That's bigger time frame. That's good. That's good for me. Okay. Put that there. Number 2. Okay. Number 2, what type of pattern is this? If you guys haven't watched our pattern video, we go over type 1, type 2, type 3, go watch that. Okay. In this case, Asian is the bottom right here. So it did bust out of Asian. Okay. So this was considered a type 1 W pattern. Okay. It's a type 1 W pattern. So that right there is what I look at. This is what I'm telling myself. This is a part of my trading plan. Okay. Number 3 is what? I want you to pay attention. What price action is there? What do we have? Do we have any dojis? Do we have any morning stars? Do we have any bullish engulfings? Yes, we do. Okay. We got dojis. We got dojis. We can consider this as this one candle engulfs all 3 of these and pretty much that one. So we got morning stars. We've got price action is what I mean. Okay. Morning stars, bullish engulfing. Okay. That's number 3. Okay. Now what I want you to pay attention to, do we have, oh yeah, I can put inside here. Let me go here. And divergence. It's not a big divergence. It might not even be that divergence, but you can see that the shark fin is when I say divergence, it didn't come all the way back down to the wick. Okay, so it's not really equal, but it did come down to the bodies, and it's out of the band, into the band trade. Okay, out of the band, that leg come out of the band, back in the band. If you've heard me say it all the time, shark out of the water, back in the water. Okay, that's it. All right, number 4. What else do we have? This is our part of our entry. Okay, we have market baseline cross and close above 13 EMA. Okay. There's 4 steps, guys. Boom. Close above the 13 market baseline. Boom. There it is. Close above the 13 EMA. Wait for the candle to close. You get your entry, and there you reap the benefits from it. That's 250 pips, guys. That's 280 pips. It pulls back on you. Okay. You're broken even. That's fine. Okay. It didn't hit your stop loss. And then the trade materializes, goes your favor. Okay. You're targeting the highs. Okay. That's what I'm targeting. I'm taking liquidity with my trade. Okay. This is what you want to see. This right here is a high probability setup. Look at your EMAs. You can use your EMAs to help you identify the direction. Okay. When they're fanned out like that and they got a good smooth movement up, your market direction is steadily going up. Okay. But don't rely on these. Don't rely on any indicators. I want you to rely on where is the money at in the market, because guys, that is the sauce. That is where they're showing their hand. Let it take out money, let it create the pattern, and then take the trade. Okay. Same thing happened the next day. Very next day. Accumulation. They even stop on it high first. Accumulation. Stop on high, stop on low, took out Asian low, created the pattern. Could have probably caught this on the 5-minute and close above the 13. Retest. And look, I tell my students too as well, if you want more entries on your trade, I want you to think about this as like if you were drawing fibs. Okay. If you were drawing fibs, I can put fibs on my bullish candle right here. I just want to do it so I can show you. I don't have the 38% whatever it is. That lets you know that I don't use fibs, but it has a 50% area. Okay. So what I do is I eyeball the 30%. I just put it in here. So I'll put a pending order, which would be a buy limit. And then I put a buy limit at 50% of the candle, because you can see that 9 times out of 10 that candles pull back 30% of their previous candle, right? So I get what we call a foot soldier. As soon as this candle closes, I get an entry immediately, and then 33% I get another entry. And if it pulls back 50%, that's 3 entries, guys. 1, 2, 3% per trade, boom. Or if I'm risking 2%, I'll mix it up to make it 2% per three positions. Okay. And then boom. So if you got 3%, I'm just saying, just to make it even, 1, 2, 3%, or you can do 0.5%, and then 2%. So you can have your bigger lot up down here at a very good discount. And then boom, you double it. What do you think you're getting? You're getting 6% out of the market. That's dope, right? So that right there, guys, is the sauce. This is what you should be doing. And then once you get done with this, you should take a screenshot, whatever you want to do, you know, and get detailed with it, guys. I just went through that briefly. Like, get detailed with it. Put liquidity on these boxes. You know, this is where money was laying and it got taken. And boom, put some comments beside it. Right? You can even go as far as going back to the 1 hour, zooming out big time. Okay. And then viewing up. I've got a peak formation low down here. It took out liquidity, or I got a big double bottom. We started to move our direction. And what you should do is put peak formation low and start marking off all the trades that you see as these pullbacks are coming, as the market is going up. And now you've got a higher time frame, 1 hour screenshot of what a good quality trending market looks like, and what the high probability trades look like inside of there. Right? So just wanted to share that with you guys. I know it was a lot, but every video that Joe and I post, guys, it's a lot of value. Like I share a lot with you guys, and I loved it. I love doing this because I want you guys to win. We both want you to win. And you know, the reason why that we explain this, and the reason why that we keep doing this, is because we came to a point in our trading career that trading doesn't have to be that hard. Guys, I'm telling you, when me and Joe first started, I mean, don't get me wrong, I've got some lines on my screen. I've got some EMS, so I've pretty much got 3 indicators on my screen. This looked way worse. Okay, I'm telling you, I had 4 or 5 indicators down here, probably 4 or 5 on the screen, and it just did not work out. It just doesn't. And eventually, guys, if you take what we're talking about, you're going to make it of your own. And most traders do. Most successful traders make it to their own. That's the reason why I tell our students that I'll give you my trading plan, but you can go by it, but it's never going to be the same. You're always going to change it to fit you, right? So want to end it there. Joe, you want to piggyback on anything?
No, I love it. Love it. Good stuff, guys. I mean, the biggest thing I think Hunter said is at the beginning is it doesn't matter what strategy you use. You can be successful with any strategy, whether it's something we've showed you, you found out. If you've got the mindset in play and you got your emotions in check, you'll be great. But the big thing is do the homework, demo trade. You know, a lot of people want to go straight to live trading, and they have no business live trading because they're, you know, have never won any trades consistently. So just keep that in mind. You know, everything Hunter said today, start at the daily, mark it up, mark up your closes, where the market closed, what trend you're in, and trade with the trend. Those little simple things keep you out of trouble, right? And they give you a higher percentage or a higher chance for winning than they do, you know, trying to make up your own shit, if you will, because that's what we do, guys. When stuff starts happening and things aren't going right, we start making things up. And when we start making things up, that's when things go wrong. But if you remove the emotion, you remove the baggage, you remove all the dogs barking, the kids are crying, somebody ate your homework, all that crap, and do exactly what Hunter just said. You study, mark up, have your perfect setups. You know, be consistent every day. Like Hunter said, he gets up every day, he works out before he trades. Like, have that routine, have all that stuff, guys. And you put all that together, the culmination of all that. It doesn't happen overnight. You have to do it consistently for a while, and then it becomes second nature and it becomes easy. When you do that, you'll be in a great place, much happier trader, much happier life. With that, Hunter, this is good stuff, man. I love the way you taught it. I always love when you go back and refresh on stuff that is fundamentally sound. So thank you for that. With that, we're ready to close it out. So you want to take it home? You want me to?
Heck yeah, guys. Keep pipping and dipping, and we'll see you guys on the next one.
All right. Take care, guys. Bye-bye.